would approach it like a sales meeting, in the sense of, not that you're trying to like sell, that's not what I mean, but like some external folks, and take it seriously, like, do you show up to a sales meeting with no agenda? Do you not have a deck ready? Do you not have like, well, these are the points I'm trying to get across. This is the things I need to make sure I find out, those are, I think, the things that you want to approach.
Welcome to Prime Venture Partners Podcast, a podcast for entrepreneurs looking to build and grow their startups. Learn about uncommon strategies and common traps from makers and doers of startup ecosystem.
Welcome to the Prime Venture Partners Podcast. Today we have with us Amar Goel, founder, former CEO, and now chairman of PubMatic. Amar, welcome to the show.
Hey, thanks for having me, Amit. I'm excited to be here, and hopefully it'll be interesting, fun conversation.
Absolutely. Lots and lots to talk about. So I don't know how I'm going to fit all of that, but congratulations on your recent IPO. And you've, of course, been a serial entrepreneur, perhaps a parallel one as well. I remember Comely from back in the day, and then I was reading on your bio that you did ChipShot. So can you talk to us a little bit about the kind of more recent PubMatic story in terms of how you started, perhaps some of the lessons learned, and the thrill of taking a company IPO?
Yeah, sure. It's a big question. I think, let's see, it's been, we went public, probably many people don't know, but we went public in December of this just a month and a half ago. And it's been very, very exciting. And something that, is took us 14 years overnight success. So, it's been pretty cool. And, knock on wood, the stock has been doing well. So, that also is nice to see, if you will. But yeah, I think, I don't know, lessons learned. I'm just trying to think. I mean, I guess, a couple things. One is that it's a long marathon. And, there's a lot of ups and downs, on the way. And I think, in some ways, I think those are like trite comments in a way, like everyone would say that, but I think it's true, when you, I don't know if you follow like Buddhism or, Hindu spirituality or whatever, there's these concepts about, be present, don't have expectations. Expectations really are kind of like, the mother of all evils, if you will. And I think you have to approach your entrepreneurial journey, I think, that way as well. And candidly, I don't think I've always approached it that way. I have expectations about, we're going to raise money at this price, or we're going to get to this revenue, or, whatever it is. And it just, life has its twists and turns and takes time, and I'm not even trying to say that it'll always work out. I don't know if that's helpful.
Wonderful. Lots to unravel there. And starting right off the high with the spiritual quote, I'm also a big believer in spirituality and the Bhagavad Gita and so forth. But maybe, so tell us about, like, what is that mindset switch
It's like
changing?
Nice, but can you tell us some real advice?
No, not at all. No, actually, this is quite real. So what does it mean to switch from expectation? And since you recently public, and I was a part of a company earlier that went public, Make My Trip, we used to joke that we've now gone from long-term thinking to QSQT. And many of the listeners here from India will know a famous movie by that name by Amir Khan. But this, of course, QSQT is quarter se, quarter tak, right? Everything becomes very short term. So the expectations become very high and actually becomes even shorter term. And we saw that changed our behavior at Make My Trip, and we would regret it, like saying, man, if we weren't public, we wouldn't be QSQT. I know you're newly public, but unfortunately, I think you're probably going through that. So I do want to understand, what does it mean to change that expectation mindset, and how do you continue to think long term, or give some practical examples of what does it mean to not have those expectations, so to speak, and still keep doing the thing?
Yeah. So, you asked me to do this discussion, actually, I think last October, and you had no idea that we were going public. And in fact, I said, hey, I'm not going to be able to do the interview. And to be honest, I think I gave you some lame response because we were in a quiet period. And so our legal team was like, Amar, you can't do an interview right now. So I'm really excited to do it today. But, if I were to look at how many interview requests I got the last year versus since we went public, it's a lot more since we went public. It's probably like 10x, right? But that's really just like external validation, like nothing's really changed in what the company does, or hopefully how we do it, or what we do, day to day. I mean, there's a few things that have changed. Okay, we have a public currency. We could, we have more flexibility to do acquisitions than before. But like fundamentally, nothing has really changed. And so, it's kind of like everyone looks to like, oh, who raised money at a high price or who went public, but that's just something that kind of happened along the way. Like the people building the company, the employees, the founders, the investors, all the stakeholders, the customers, like they're just going along living their life, and there's just so much luck involved in so many of these things, and I personally believe like there's just a lot of luck, and just from, I was born to loving parents who said, hey, get an education, and like push that really hard in me, I mean, it again, sounds trite, but like, a lot of people just not that fortunate, right? So anyway, so I think the point is like, you have to have that internal fortitude, like you are going to go through these really tough periods. I mean, we're in the ad tech sector, for folks who don't know, and it has not been the favored son, of investors,
Yes.
of frankly anyone, and so, I think it's taken a lot of, effort and kind of, like I said, fortitude to just kind of stick with it. And I mean, so much credit goes to my brother Rajiv, who's a CEO, and Mukul, who's a co-founder in Pune, and who runs engineering. I mean, who for sticking with it for so long, and really just putting a foot forward each day and saying, how do we build a better company? And I think one of the things that I think is amazing about what we've done, or one of the things I think is our kind of superpowers as a company, real strengths, is that I think we're an execution machine. I think it's something that we are very diligent. We try to show up every day and work hard and take notes and listen and like, discuss and argue it out and like move forward, And so I think you just have to be like very intellectually honest, and you just have to sort of stay true to those kind of values. And, I think Jeff Bezos has like a great quote, which I'm going to completely mangle, but it's something to the effect of, when the stock price is going up, you think you're really smart. And when the stock price is going down, you think you're really, you feel really dumb. You're the same person, it's just like some machine out there decided to buy or sell your stock, And so I think that's really key, to just think about it. It doesn't really matter what's happening externally per se. You've got to really kind of stay focused on where you're trying to go and what you're kind of trying to get done. I think that was a really long answer. Sorry, but
No worries, no worries. I have lots of follow-up questions. So let's talk about the ad tech business, and two things I'd like you to talk a little bit about, right? One is, yeah, like you said, ad tech's been sort of, in favor, out of favor, mostly out of favor, but like, uh,
tell
and
me
so,
about it. Yeah.
so, how do you think about fundraising and the journey all along the way? And of course, ad tech inherently has better sort of unit economics, broadly speaking. And the sort of sister question is, in a highly red ocean type of market where there's so many players, right? There's literally like hundreds, if not thousands of sort of ad tech companies, even now. If you're an entrepreneur in a sort of red ocean space, ad tech or otherwise, how did you guys sort of distinguish yourself from a positioning point of view, from a GTM point of view? I know growth hacking is one of your kind of USPs, but just more broadly, like just from a positioning perspective as well, if you could talk about both of those, like fundraising in a market that in an industry or an area which may be in and out of favor often, and then positioning in a sort of deeper red ocean.
Yeah. I mean, I think, in some ways it's simple. Like, I think you have to go after something with large TAM, addressable market, or could be small TAM today, but it's growing fast. So you think it will be large TAM. And you have to focus on that, and you have to do it better than anyone else, And there are a lot of distractions that come along the way about new things, and, oh, this thing looks good, and oh, this could be interesting, and this is going to help me grow my revenue, and all that. But I think, you really have to stay true to, is this really in our core? Is this really what we're about? And, is this what we are going to be the best at, right? And if you're not going to be the best at something, or, in the top couple, then I think it's really hard to build a really valuable company in terms of the kind of the venture ecosystem world that we live in, right? I mean, at least, probably most of your listeners are. I'm in tech, I'm in venture world, right? In the sense that, like, I mean, what do venture guys do? They like pour $500 million into a sector in 5 companies, or it could be $5 billion, just depends. And then it's a fight to the death for a few companies, And so you have to wake up every morning and be super focused and focus on that one thing, and do it really well. And so I think, I do see a lot of companies go in 10 different directions, and, it's a press release that sounds good and like, doesn't matter, I mean, one of my friends kind of told me like, oh, we spend so much time looking at our competition and like, trying to, like reverse engineer what they did, or like try to, outsmart our competitors. And he's like, we should have just stayed, focused on our customer, and what do they need? And look, I mean, let's be honest, you can't like ignore the competitive dynamics out there. If you got a customer underpricing you, that's, significantly, that's your problem too. But the point is, like, you got to start with the customer and work backwards from there. I mean, I think Apple has a kind of a principle around this, which I think is, tremendous, is like, they really don't seem to pay very much attention to competitors. They basically say like, what does the customer need? Or, Steve Jobs is famous about trying to predict customers, or, tell customers what they need. But the point is that they're like, well, this is what we think. And like, this is what we think the customer needs. And they're like, we're going to go build it, and they're not very concerned about, oh, well, this competitor has that feature, or, is somebody else is getting into the market. And so, I mean, it's not easy. We're all startups. How do we compete? How do we think like we say, oh, we don't have the luxury of time and money that, Apple does. But, you can have the clarity of thought that Apple does, and I think that, if you think about a cheap car and expensive car, you can put good design into it. You make
Sure.
a cheap car chooses not to do it, but like, costs the same amount to design a cheap car or an expensive car. Like, so we can all think clearly and be intellectually honest about what are we going to be best at and what is valuable to our customer set.
Absolutely. So let me riff on that a little bit further, right? To say, how do you convince investors, right? You can say, look, I'm very focused on the customer, right? In a large, deep market, big TAM, but you're one of like, just making it up, 83 players, right? And to begin with. So, again, as an investor now, I'd say, look, this is like really, I don't even know who's going to win here. You seem like a good set of guys and gals, and it's like an interesting product, but like, how do I really know? So were there any lessons learned from the PubMatic journey, right? In terms of beyond the customer focus, right? In terms of positioning or segmenting the market, or just trying to be a little bit more blue ocean, or no, not really. It's just like relentless execution and kind of things just took care of themselves.
Well, I mean, I think, no, it's a good question. I mean, I totally get where you're coming from. I mean, I think that you have to show the progress that you're making, right? I mean, so okay, of course you can tell a great story and say, we're the greatest company on the face of the earth, right? But then it's like, okay, well, let's look at the data, right? And so then it's like, well, let's go talk to your customers. Like, which customers are you winning, right? Are you winning tons of deals? Who are you showing up who are you competing against, right? Are you beating them or not? Why are you winning some deals? Why are you losing some deals? And so, then like, what do the metrics look like? How's revenue growing? What's the cost of customer acquisition? Like, how fast are you growing? Like what areas, what are customers saying about why they chose you or why they didn't choose you, you know? And so I think that's where the rubber meets the road about your sales pitch, if you will, versus, you know, reality. And so I think, you know, talking about kind of, you know, investors, I mean, I think there it's like you got to be able to show them the data, you know, and you have to build, you know, you have to take what do you think is important, and like I was talking about, what do you think is the thing that you're going to be best at, and then you have to be able to show that in the data and in the metrics that, well, we are achieving this, you know. And so I think that if you are making progress on that, you know, then investors are a lot more receptive to what you're saying. I think the second thing I'll add is that, you know, because our sector has not been in favor, you know, that very much pushed a ethos to us to get profitable and to have our own destiny. So we haven't, before IPO, we hadn't raised any capital since 2012, equity since 2012. And so, you know, we have been profitable, you know, since then. And so I think that, you know, we became a very like self-reliant company, if you will, not always, you know, saying, hey, I need to go raise, you know, more outside money. I'm not bad mouthing that approach or whatever, but I do think a lot of companies keep raising money because they actually haven't. I think some companies are really doing it to pour fuel on the fire and to grow faster and accelerate and, you know, own all the TAM, and that's great. I think a lot of companies use it to hide a lot of unhealthy things happening inside the company.
Right, right. So very interesting. And the way we got sort of reconnected, I know we've known each other for a few years prior,
Yeah.
is one of your investors, right? Who is now kind of one of my partners, Ashish Gupta, and I've known him for like 25 years. He mentioned, and we were in some other conversation, that, you know, I asked him a question saying, you know, you are on so many boards, and I think he's on the PubMatic board for a while. Like, what are some of the best practices for boards, and which companies run the best board meetings? And he said, oh, you know, absolutely, PubMatic, and then the other one was Make My Trip, which I was fortunately a part of. So I'm going to switch gears and talk a little bit about, because also I think it goes in a slightly, you know, maybe overextending the analogy here, notion of focusing on the basics, right? And profitability and unit economics and all this. I'm astounded that you haven't raised since 2012, but in a good way. Clearly says that you're already behaving like a large, mature, sort of, dare I say, quote unquote, public company, right? So can you talk to us a little bit, just completely switching gears out of, you know, PubMatic, the business, to kind of running effective board meetings, to doing kind of the basics, right? Like some of the things that some of the early stage entrepreneurs who have aspirations someday to become a big company or even potentially go IPO can learn from.
So, and you know, a lot of that credit goes to Rajiv, the CEO, and our CFO, Steve, who are the architects of that. I would say that probably we've had some learnings from Gomli as well. And so the board meetings were actually very similar when back had started another company in the digital advertising space in India and Southeast Asia. So a couple things. I think one is that board meetings are, I find them, they're a little bit like a test or like a homework check, you know? So I think a lot of people look to the boards to like help them set the strategy, and they're trying to meet these investors to really say, oh, this is going to be like a strategy partner for the company or whatever. I see boards as less as that, you know. I think that, of course, you get people with great experience and they can help, but they're for the most part never going to understand the business as well as you do and your management team does. And so, you know, to expect them as kind of outsiders to really be able to tell you how to run the company in terms of like, oh, we should enter this market or not. I mean, frankly, if they can tell you that, then you have to wonder if you should be the CEO of the company, you know, because it sounds like they know what to do better than you do. But at the same point, they have a lot of pattern recognition skills. They've seen a lot of stuff before. They're like, feels early to like expand internationally, or we haven't really, gotten true product market fit here, or like, we're still burning cash in our core markets. Like, are we sure we want to go and, set up a flag in Europe or whatever it is, right? So I think they can be helpful there. But anyways, getting back to the point I was trying to try to say is that, I find that board meetings are like, I think, a very useful check for the entrepreneur, for the management team every quarter. We do our board meetings quarterly. We've almost always done them quarterly. We've had some periods where we weren't doing well, and so we, started doing like a monthly board call as well to kind of keep everyone up to date. But they're very useful check for the entrepreneur or the founder, CEO, whatever, to lay out, well, here's what is happening in the business, and for you to be clear about what is working, what is not working, where you're like, we're lost or we're struggling, And I think a lot of times you get so caught up in the day-to-day and working, and like a board meeting is a great chance to write down your thoughts and clearly and with some structure and like almost like laying out a legitimate, an argument about, where you're going and what you're doing, And I think maybe some of that comes from like, I'm an ex-consultant. I spent some time at McKinsey. Rajiv's an ex-consultant. So maybe that's kind of how we just approach it. But like, it's a really good way for you to stop and say, let me write down what's happening and let me think about what's happening and try to articulate that to some other person and see if they just look at me with a blank stare and say, that is such BS, right? Or, hey, this sounds good, or like, maybe nip and tuck here, but like, feels like things are on the right track. So I think that's kind of one, overarching thought, to like how to approach a board meeting. It's like a homework check. And I can't tell you how many board meetings I've done where I'm like, oh, God, I got to get this whole thing ready now with, our CFO and the management team. It's a pain in the ass, if you will, or whatever. But, again, it's a good, tests are a pain, when you're in 6th grade and you're taking a test, it's a pain in the ass, but like, it's still good. Makes you check if you learned everything, or anything actually. So that's kind of one, overarching thought. I think a couple other things I would say is that, I would approach it like a sales meeting, in the sense of, not that you're trying to like sell, that's not what I mean, but like some external folks, and take it seriously, like, do you show up to a sales meeting with no agenda? Do you not have a deck ready? Do you not have like, well, these are the points I'm trying to get across. This is the things I need to make sure I find out, I mean, those are, I think, the things that you want to approach, having your board meeting. So like, send out the deck ahead of time. I think if you show up with a 40-page deck at the meeting, it's the first time people are looking and there's numbers everywhere and it's hard and it's on some projector, and then people are just like, they're not prepared to react. And so, I think you should, ideally you'd send out the board meeting materials out, 3-4 days in advance. I mean, candidly, we don't always do that, but like, there has not been a board meeting in 10 years where we not send the materials out ahead of time, there's an agenda that's been discussed, a week or two ahead of time. Like, hey, these are the topics we're planning to cover, I've got a bunch of other things. Let me add one thing and I'll stop. And then Amit, you can tell me if you know, any other thoughts you have. But so one of the things we've done that I think has worked well, and I think it came from Naran at Nexus, is like, we have a pre-read. So we'll sort of say, okay, here's the topics we want to discuss at the board meeting. And the deck that we send out ahead of time has the slides related to those topics, but then we have what we call the pre-read section. And that's where we just go through all the, the financials and, the financial plan and like, maybe some updates on certain parts of the business. And, there's an engineering update and there's a go-to-market update and whatnot. And so, and then when we come to this, so that's, people get a holistic view of the business, but you don't spend the whole board meeting reading that deck, and just talking about the stuff that people want to know, but it's not worth everyone's time and effort to be together to discuss. So what happens is when we come to that board meeting, then we say, okay, are there any questions on the pre-read? And then people, if they have a question on the, hey, I didn't understand what you guys meant when you said, whatever revenue is growing 30% here, what's involved in that or whatever, right? And we'll of course take 10 minutes to do a voiceover on the financials, but we like try to get through that, relatively quickly. And of course, if there's a problem, you're going to dig in. But like, if it's just a normal quarter and things are chugging along, then you're like, hey, the pre-read we cover in 20 minutes. Now we've got, the remaining 2 hours to focus on the board topics, the topics that we all felt were important to discuss.
No, lots
So
of lots of interesting insights in there. So let me just pick on first the board itself. So I love the pre-read. I think we do that and we encourage that a lot. I think that's a wonderful idea. I just loved your articulation of treat it like a sales meeting or a client meeting, right? Like you would, just like poof, cuts through the chase, right? Like, okay, if you would not do any of these things, and then this is not only the investors, right? You're also on the board as the founder, or if you're multiple founders. So it's the best use of your time if you get something out of that thing. So I think that's great. So going back to the kind of, what's the best way to leverage the board? So I know you said, look, don't have them think about or design your strategy, use them as a sounding board, literally, right? Pun intended. But because they're good at, breadth, or they've seen pattern recognition, or they've seen other companies or whatever. Are there some other examples of how you've been able to leverage the board well, or any kind of tips on that, and including the managing? Like, I think another thing you said was that, everybody knows what the agenda is going to be, right? A week prior or something like that. So you also need to manage the board. One thing I recommend to entrepreneurs is have an anti-agenda for every meeting, saying these are off limits, right? Not for this meeting. We can schedule another one because we don't want to go into a rat hole. So how do you both manage the board as well as leverage the board in a way, right? I think if you can talk a little bit more about that, that'd be helpful.
Yeah. So I think, managing the board, maybe talk about it in the context of the board meeting. I think, again, I go back to the sales meeting. Like you pay attention in a sales meeting. You're like, I've got 45 minutes. What are the things I need to discuss with this, this customer, right? It's like, well, I got to make sure we cover pricing, or, we like make sure I understand if he really is, happy, and like, we don't waste 30 of the 40 minutes talking about something, not really that relevant. So I would say similar, like we have those topics, you got to manage the clock, and you got topics 1, 2, 3, 4. Don't spend 80% of the time on topic 1 because somebody just happened to, you guys started having an interesting discussion. You got into some rat hole or whatever, and you just kind of kept going. And then it's like, and you're like, well, everyone seems to be enjoying the conversation, so we just kind of kept going. Well, no, you're running the meeting. So you got to say, hey guys, like we allocated about 30 minutes to this. Yeah. Like this is great discussion. I'm going to follow up with, these 2 people because they're, having a lot more thoughts, but like, I want to be cognizant of time, and let's move on to the next topic, And so, it's a balance, right? You're not trying to cut off discussion. You're not trying to stifle people to like have a conversation, but you got a problem if you didn't cover 3 what were supposedly important topics a week before the board meeting, and then you didn't even cover them and discuss them. So I think you got to manage the time there. How to leverage the board. I think I think we do an okay job here. I think that we probably could do a better job here. There's a story I've heard about Frank Slootman, who's the CEO of ServiceNow, and he supposedly gives, he seems like he's pretty hardcore. Yeah, he gives assignments to people, and I've heard from like board members are like, literally that night or the next day he calls you and is like, hey, have you done it? And people are like, it's just been a day, and he's like, yeah, it's been a day. Like, where's your assignment done? I need it. So that's like, let's call that the Olympic standard, maybe. We're not.
Don't mind me if we edit this part out of the podcast.
Okay.
Start getting action items. No, I'm kidding.
Yeah. Like, no. That's not how board meetings work. Well, and I think, candidly, like, I notice a lot of, maybe I shouldn't say this, but like, I notice a lot of board members, like, they don't take many notes in the meeting, and I open my computer, I take notes, and I'm always kind of like, if you didn't, so some people do take notes, but some people don't. And I'm always a little bit like, if you don't take any notes, you must have a great memory, because a year later or a month later, like, how do you really kind of remember? And, if you're like an investor, I assume you're on multiple boards and, like, you're, time sliced and you're moving around, like, how are you going to, get your actions done or whatever? So anyways, I think that, we will take notes and we will follow up about different topics. And, I think just kind of going back to this point about like how you leverage the board. I mean, what I feel like has happened to us is that, we've had the last time an investor joined the board was 2012, Eric Carlberg from August. And then we had our first independent board member, Kathy Black, I think join in, I'm sorry, I'm forgetting, but let's say roughly 2015. So I think we've had that chance to like get to know our board members, and you kind of get to see the strengths and weaknesses of people and sort of like where they're focused their energies on, where they're like Eric is a, former CFO, former banker. And so like he really is incredibly knowledgeable, about financial matters. I mean, I've literally called him up before and said, hey, can you give me a tutorial about, balance sheets, and so like, I mean, he really, that's one of his core areas of expertise. And he's been on multiple public boards about that on the audit committee. And he really knows that stuff well. He knows a bunch of other stuff too, but like, so when we're in a sticky financial situation or we're like gonna go get some debt or something, he's definitely on that short list of people where you're calling him and saying, hey, help me think through this term sheet. I'm going to send you this thing. Can you look at it? How would you negotiate this? Whatever, whereas maybe somebody who's a marketing expert, you're like, well, I'm not going to focus all the, audit committee comments on that person, but use them in other relevant ways. So, I think it's like getting the most out of those folks for their skills and their talents.
Wonderful. So as we come to the sort of tail end of the podcast here, you mentioned quite a few attributes that were interesting in terms of your own journey. Execution focus, customer focus, luck, which of course you can't control, but just being sort of cognizant of that, intellectual honesty, fortitude, etc. Let me ask a sort of more classic podcast type question, which is that if you were to give yourself advice from 10 years ago, right, not 14 years when you started the company, but let's say 10 years ago, like you're 4 or 5 years into the company, which many of our possible listeners are, what would you rather pay more attention to, and what are things that you would pay less attention to, if there's any other things that come to mind? So Amar giving advice to Amar in like 2010, right? Time machine.
2010. Okay. Yeah. So, okay. Long time ago. Yeah. So I think, I think probably the biggest advice I would give is like, it's about kind of this is your life, you're living your life. And I think that enjoy the journey, if you will, not just the, enjoy that journey and like enjoy what you're doing and make it fun. And don't forget to enjoy your friends and your family along the way. And like, I think that, I don't know, I don't think it's just about like, hey, making my startup successful is above and beyond, everything else. And I mean, again, candidly, I'll say that I think I didn't approach it that way always, and I think in 2013, I'd come back to be CEO of Comly, and we went through some tough times there, and eventually we managed to sell the company, but it wasn't like some great exit or anything like that. And I learned a lot in that process about myself for sure. And I think it's when you go through some of those tough experiences that you really become a lot more thoughtful, about, what are you doing in life and where it's going. And that's the time to maybe reflect a little bit. So, I think that was when I started to frankly think a lot more about these things, so anyways, I hope that might be helpful to somebody. I'm sure somebody who's 25 is going to roll their eyes at me, but such is how the arc of life goes, I think.
Absolutely. No, wonderful. That's a great high to end this podcast on. So thanks again, Amar, for being on the Prime Venture Partners podcast. Delight to have you.
Thank you. Thanks. And excited to see what you guys are doing as you keep building Prime Ventures.
listeners, thank you for listening to this episode of the podcast. Subscribe now on your favorite podcast app for free, and you'll be the first one to know when new episodes are available. Just search for Prime Venture Partners Podcast in Apple Podcast, Spotify, Castbox, or however you get your podcasts. Then hit subscribe. And if you have enjoyed the show, we would be really grateful if you leave us a review on Apple Podcast. To read the full transcript, find the link in the show notes.